Hey, good afternoon, everybody. How's it hanging? I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I forgot to put Walmart on here. I added S long. I'm keeping T triple Q short. I had that yesterday. Added Apple short, and I added Walmart short. I added Walmart short on the swing list. My Apple short's very small. My Q short's very small also. My Walmart short's a little bit bigger. What's Path doing here after hours? Up. Excuse me. Path trading up. Revenue guidance looks pretty good. Numbers look pretty decent across the board. I like this company. They got no debt. Actually don't have a position into this report for once. But that's kind of been the real saving grace for me on liking this company and really liking to stick with it to the long side is they have no debt. So this earnings report back here in May was a disaster. What else do we have out? Ulta trading up. You got Lulu trading up. We got DocuSign trading up. Wow. All right. Palantir the headline. Palantir and Shield AI partner on AI-enabled military aircraft. Palantir moving on that after hours? Not really. Moving 15 cents up after hours, but it'll probably go up $1 million tomorrow on that. Oh boy. All right. Let's jump on in. So the market is trading up after hours. Um, no, it's not. It's not. We're trading down after hours. Actually, I'm surprised to see that when every earnings name I just typed up is trading higher. We're trading down a little bit after hours. So we're trading down like 50 cents or so here. So we closed red by a bit today, just a little bit. Right now it's 1/4%, but it was a little bit less than that. The Qs here, same deal. They're trading 50 cents down after hours, so it shows us at 0.38% down on the day, so it was a little bit less than that, but it was a red day. We actually had a red day today. Holy cow. And the IWM is trading 15 cents down after hours. It closed down over a percentage point. So Russell was once again really where the relative weakness is. Let's take a look at these daily charts. Intraday chart, very, very, very boring today. The range and the spies, the range and the Qs was like very, very tight. I got this T triple Q position on, and I felt like it was. And my position is small, but I felt like it was just literally not moving. So the market seems like it's primarily just waiting waiting for non-farm payrolls tomorrow. Maybe slid a little bit down into non-farm payrolls. But taking a look at these daily technicals, we had noted that the Qs at the close yesterday had finally touched that extreme extension point. So, I started a very small short. I've been talking about how I've been kind of game planning these shorts because the market is still so bullish with such a strong underlying bid to it that my approach on game planning these shorts has been to be just very shallow in terms of price targets. Shorten a little bit when things are getting really extended per the Qs. A day traded Apple short yesterday, closed at the close. It opened flat, so I reshorted what I closed out at the close and kind of traded that all day today. Made a few bucks on it, but same deal, just very shallow price target on the Apple short. I'm not even looking for moves down to the ADMA on the daily. Walmart's another one. Walmart had a pretty big. Uh, you could argue it's a day three up. You could argue it's barely had a red day. I think it's only had one red day since this earnings report back here on November 19th. This is actually a lot of extension for how Walmart typically trades. Um, so that one I did short slightly more aggressively, but even with that, I'm not even looking for a full move down to the ADMA at this point. I'm just looking for a move to a little bit above $93. So putting some shorts on as we get to more extreme extension zones. but the underlying bid on this market is still so extreme that I don't want to fight it because the higher probability situations right now are still the continued grind up that we've been looking for, discussing, and expecting for weeks now, and it's been happening perfectly. But there is a chance that that grind up at some point actually turns into a parabolic move higher if we're able to really break up. We've seen it with a lot of these individual stocks that have been going crazy. Today was a day where another day, I should say, where the market itself did very, very little intraday with the spies and the Qs. But some of these stocks are just like it's starting to get silly out here with some of these names. I mean, SOUN with this huge move up to $13.50 today. The quantum computing names are just going nuts again today. Ion Q was up a lot. That QB, what is it? QBTS had another, crazy leg up. I mean, it just seems like there's just kind of one name after the next. I woke up this Jumai a little bit today. That Unity that I've been in gave a day two. It's just like one name after the next seems like it's just waking up and kind of exploding. We're really in that environment, and we had highlighted some charts that were in uptrends that then broke to the upside. That's actually a possibility for the market as well at a certain point. A certain point, if this buying continues, there's a couple things that could eventually happen in this market. I don't think. I mean, look, it's just data. The systematic buying isn't done yet. Um, you still have heavy buybacks ongoing every single day. The Goldman Sachs model notes that the blackout window for the January earnings season doesn't really begin until like December 20th. So we've still got I don't have a calendar in front of me here, but I'm not sure how many actual trading days that is, but I would assume it's like another 10 trading days or so until the buyback blackout window hits. You still have, the vol control funds really releveraging. We haven't seen like the systematic funds get into that like extreme positioning yet. When they start getting into that extreme positioning like they were in like July. I'll just move something here on my chart. Um, like back in July was the last time that we had really noted like extreme upside positioning. You can get like readings on this stuff with the CTAs and the vol control funds. You, at a certain point, we see like, they're in the 90th plus percentile of long exposure, and there's not much left for them to buy, even, if realized vol stays low or even if the trend stays higher, which tends to be what causes, vol control funds and CTAs to be buying respectively. We're not at that point where everybody seems like they're fully deep into the pool. But we're starting to throw up some warning signals. I think that this market's getting frothy when you look at some of those names I just typed up. These crazy stocks are just catching bids and moving higher. And then we saw GameStop start to catch a bid at a certain point today as well, with like a roaring kitty tweet, and some of the crypto stuff that's going on there is getting a little bit crazy. I was actually surprised. I thought that they could pull Bitcoin back on that, first test of $100, but just with the animal spirits really coming alive right now with the market broadly, I didn't want to take this short really yet. I know some of you guys caught some MSTR short today, which was a really good trade. But I wasn't ready to jump back in on this stuff to the short side yet, just because I was nervous just with how they're running up. Again, these quantum computing names, and these SOUNs, and these GameStops again. That this could have been, a break of 100,000, leading to just animal spirits ripping this thing up to some sort of parabolic top. So I didn't want to jump in necessarily too early on that. But that trade did fail down. So the bottom line is we're starting to see some warning signals out there, but when there's still so much forced buying in this market, I'm not ready to be aggressive on the other side. I'm starting to get to the point where I don't want to be as aggressive on my long buying. There's been a period here of a few weeks where I was just very, very aggressive on my long buying, really starting with this pullback here on like November 15th. That's when I really started getting out of shorts originally, that I was short from this extension, and starting to like really buy back into the long side. And I've been sticking with that. I've been sticking with trying to keep as much long exposure on as I possibly can into this up move. I'm finally into a point here where I don't want to be buying as aggressively as I had been buying. But I'm also recognizing that there's still a really strong underlying bid to this market. And just because I'm not going to continue to buy as heavily as I have been, it doesn't mean that I'm liquidating my longs. I've got a lot of long exposure on. I'm slowly piecing out of some of that into these up moves, but I'm recognizing that there's still such a strong underlying bid to this market that we can just continue on this 45-degree up path that we're on if we want to for most of the rest of the month of December, potentially even into January. Or you could, like I was saying before, with some of these um, crazier stocks, it's not impossible to see the index do it at a certain point where you actually get the market to break. Everyone can pretty simply, I'm not a big like line drawer on charts, but you can very simply draw this channel that's on a 45-degree angle here in the spies. It's not impossible for that to actually break up out of this pattern at a certain point. That would then lead to a little bit more of a climactic top for the market. Maybe you see the market start to rip higher, but the VIX also moving higher at a certain point. I don't think we're at there yet, but it's starting to get to the point where that's going into the back of my head. So I don't want to be stuck, you know, starting to short heavily when the market is, having a really strong underlying bid still. We're on this 45-degree upgrind, and there's a potential of us to actually really break up and have a parabolic move. So, for the moment, for me, the strategy is the same. I'm sticking with the long positions, though I'm not buying them as aggressively as I had previously. And if anything, I'm, slowly piecing out of some of my longs into this up move. Um, but any shorts that I put on are just kind of quick shorts where I've got pretty shallow targets on them. I'm trying to make some money when I feel like we get a little bit too extended in the short run to just make a few bucks. And then those pullbacks are opportunities to cover those shorts. And if you want to be even more aggressive than me, to buy more. But we did start to see, the Qs get to that $10 of extension at the close yesterday, and didn't quite get back to extreme extension versus the ADMA today. It would have to get up to 525, but still, managed to hold in really well. And then this is in front of this non-farm payrolls number tomorrow, which, who knows what's going to happen on that. But the read through, like Bill and Pat were saying a little bit during the day today, I think is generally bullish, almost no matter kind of what the outcome is. If the number is good, then the economy is strong. If the number is a little bit weak, then it just gives the Fed more clearance to cut rates. I still think the Fed's going to cut rates almost no matter what. I guess the bad situations on the non-farm payrolls tomorrow would actually be like a very big miss or a very big beat. Because if you got a very big beat, then it's all right, the economy is overheating and maybe we can't cut. Or if you have a very big miss, then oh boy, do we have any problems with the economy. So I think that like an inline number or small beat, small miss is probably gonna generally be considered a good thing for this market. And I still think that the Fed is gonna do this December cut and then really reassess in the new year on what the economic numbers look like after they've done a full percentage point of cuts over the course of 3 meetings. So it's kind of just where we're at on the macro front, I think, with the market and kind of the big picture game plans. As far as individual stocks, I talked about them already. I was focused a little bit actually on the short side with Walmart, Apple, TQQQ, continuing to battle this Palantir a little bit. I lost more money on my Palantir swing today, obviously, because it moved higher. But I actually day traded it like extremely, extremely well today, if I can give myself a pat on the back. So managed to save myself a little bit of the pain of the stock being up on my swing trade with how well I kind of traded it intraday. Um, Initially doing some shorts into this extension move, pretty much fully liquidating those day trading shorts into this pullback into equilibrium. Not revisiting those shorts until this extension move into 73. covered those extension shorts by like 72.50. But then after I had covered those extension shorts, I changed my trade a little bit to like a potential momentum move lower, coinciding with this little 1 p.m. down candle and a really big bearish option flow put that we saw that was over $1 million, $71 puts for, I think it was early January. I forget the exact date, but it was like the first time I feel like we saw some real bear flow actually come into Palantir in the midst of all the bull flow that's been coming into the stock. So I have seen that as a signal at some point in the past, some points in the past with some of these really high flying stocks when the option flow starts to switch a little bit in certain spots and you see like a big order go through like that, that it can be a signal to try to push it. So I had fully liquidated my second day trade basically, which was the second extension short, into like 72.50 ish. And then shortly after doing that, I reshorted a very big position, actually, much bigger than I took on that extension short on the way down, actually through 72.40, 72.47 was the price I was able to execute when we saw the flow hit, and that worked really well. I covered pretty much all of that at 71.67, which the low of that was 71.64. But I reshorted the bounce on it. I covered it. I reshorted the bounce on it, and I covered it again into the close. So managed to day trade Palantir really well today. Um, Amongst those other names. And I got into a little bit of this S. I bought a little bit of S pre-market, covered into the up move, got back into it really small at $25. I just think the company, I like the earnings report. I know it disappointed a little bit. I thought it was a good report, but the stock has just traded so well into it that good wasn't good enough for S here. But I like the company, I like the report, so I just nibbled small on this S and kept it. I'm keeping it very small. So that kind of covers my day and my focus, and again, the crypto stuff a little bit. The only one I didn't mention, I wasn't in it, but this was probably the trade of the day. It was on my list this morning. Was the Tesla buy through that 360 to 361.50 zone? This was just phenomenal. I know Brant, Josh, and and others were talking about this in the VTF this morning, and I brought it up again in the morning meeting, and it was just like this is like the ultimate breakout. I talked about in an afternoon meeting recently. Someone had mentioned something from one of my classes that talks about how like my favorite moves in the market are like those opening breakouts that happen right in the beginning of the day when the gap's not too big and you just get one chance of getting stock and you either got it or you don't and then it's gone. This is the perfect example of what we were talking about in that afternoon meeting. I don't remember if that was yesterday or the day before. If you're looking at 360 as your breakout spot, this thing opens up at uh 395 spot 85, puts in a quick low at 50 cents, breaks through your 360 trigger. You got to buy that 360 trigger. You got to be ready to buy it. You got to have this on your screen the second the market opens and be marketing buying through 360 or having a buy stop at 360. You end up only taking like 50 cents risk on this, and then you're $14 in the money in 20 minutes. This is my all-time, traditionally my like all-time favorite trade throughout most of my career was this exact move. I didn't capture it today. I just, if they're not Pokemon, I can't catch them all, right? That's the joke I like to say. There's just too much on my plate with all the positions I'm in and managing at the same time. I just could not get over to this morning. But that is that ultimate trade that I love more than anything is when the volume comes in, they open it right below the breakout level, right before the market's gonna open. The volume comes in, it's there, it's gone. You got stock, you're getting paid. You didn't have it on your screen, you missed it, the trade's gone and you're not getting it. Um, just the perfect example of that. Interestingly enough, it didn't give follow through on this bull flag. I kind of thought it would. I thought that this was going to be another one of those days with some of these crazy stocks, and we are seeing it with all these names I just mentioned, the SOUNs of the world. I actually thought that this was going to give a bigger secondary move. I didn't buy the bull flag because I missed the first move, but I actually thought that this was going to give an even further secondary move and get up to 380 plus today off of this consolidation and tried to break higher, tailed up, and then failed. So it's a little bit interesting to me actually that like Tesla, I can't look at Tesla and say it hasn't gone. I can't look at Palantir and say it hasn't gone. But it's almost interesting to me that these names are actually not giving the follow through that they kind of were at other points in time recently. Um, I wonder, I was wondering this even when I was trading Palantir at a certain point, then it wasn't giving further strength. I wonder that when you start to really, really spread out, and I've been talking about this a couple times recently, when they start to really, really spread out the the buying flow from the call options and the gamma squeezes and the breakouts and the speculation, then when you really start to spread it out into every piece of crap stock that's out there, every, super speculative name that doesn't have profit and maybe doesn't even have revenue, that's when it actually becomes difficult for the original stuff to kind of continue. And a lot of the times in the past, that's when we have seen that you're getting closer to the end than the beginning. The only exception to that in my entire career was that period at the end of 2020, early 2021, when things just continued for months on end. Um, but I have a false print in this Alibaba at $100. It's making my P&L look insane. Um, and it made me lose my train of thought. Um, false print at $100.15 in Alibaba. Go away. Don't make me feel good about myself. I don't deserve it. um, I don't remember. I lost my train of thought. I was almost at the end of what I was gonna say anyway. But yeah. I was talking about the late 2020, early 2021 period. That's the only time in my career where this stuff has ever been able to be sustained for significant periods of time. That isn't to say it can't go for few days, few weeks even. And the juxtaposition of my thought process is that I am looking at some of these stocks going crazy and saying to myself, this feels like it's closer to the end than the beginning. But I'm looking at the market and I'm looking at the data of the market, and the data of the market's telling me that we are not really that close to the end yet. Because if it could just be that this underlying bid stays in the market, like I'm saying, through December, through the beginning of January, through all that positive seasonality, all that forced flow, and these names that are starting to look silly to me, like SOUN at 14 turns into SOUN at 30 before things actually start to break. But we'll see. We'll see. It's overall it's made for a great trading environment. So I don't have anything else to say about that. That kind of covers everything I think on my end. I am happy to take a look at whatever you guys may have. Any questions you may have or anything you want me to look at. Goldilocks and the Three Bears. Yeah, so UN, yeah, sometimes they run those things further after hours when they close them on highs. So UN going here a little bit. I'm not seeing anything in the VTF. Kevin G in the YouTube giving me some props on a good call and starting my short in the queues yesterday. Thank you. Appreciate it. Apex Joy asking me for my view on SYM. Symbiotic Incorporated. I don't know the company, so that's a tough one for me initially. Up 8% on the day, but had like a weird intraday heavy rollover. Speaking of intraday heavy rollovers, that APP rollover into the close was also kind of notable and a little bit interesting there. Um, SYM had a little bit of a level here at 28. It broke it through with some authority intraday, but rolled all the way back down. I don't like the percentage of the upside tail on this. I don't know the name well, so this looks like it was an earnings report back here on November 27th that hit it down. Maybe there was more news today that traded this thing up into these moving averages, but this is a very difficult spot to buy. I've been talking about it a lot recently. I don't like buying weak stocks into declining moving averages. It's kind of what you would need to be doing in this area, and I especially don't like it really that much after the failed break higher today. So needs time, I think. And then you're asking me, does Netflix start to overextend? Yeah, a little bit. It hasn't broken higher in that like a parabolic fashion. Like to me, Netflix here, even though it's green day after green day after green day, this is another one of these grindy uptrends. It's not like what it did back here. What the move that it was doing back here was much more accelerated and therefore much less sustainable. So then eventually you get like this big correction that happened. The move that it's been doing now has been again more like one of those 45-degree angle upruns. And those 45-degree angle upruns are interesting because they don't really extend the stock. When if you're just, every day moving a little bit higher by riding on the ADMA on the daily, you don't by definition get extended. And those are the worst trends to short, and they're the best trends to trend follow. You're just grinding up on those moving averages. You're just moving higher on a 45-degree angle. You're just getting tight lower highs and lower lows. Those are the best trends to actually follow. When I want to be looking the other side is in again those more parabolic up moves when you really extend away from those moving averages. Um, when you get that 45-degree angle trend that breaks to the upside and then gives a 3-day run after it breaks to the upside, that's what extreme extension looks like. So this thing has been moving higher. It's green day after green day after green day, somewhat like the spies, but it hasn't been parabolic. It's just kind of been grindy. Today was really the first day, yesterday through this morning, that it extended a little bit. So it's extending a little bit. There is some notable extension, I think, off the 21 EMA at this point, but it's like another chart to me that just looks a little bit too early to come in on the other side on a short. And if you're long, I would just kind of continue to trail it tight off these little pivots off the moving averages. From Robert, were you considering trading UNH today? I'll be honest, it really wasn't on my radar. I don't like trading the $600 stocks. I know that it was potentially in play with what happened yesterday. Um, but yeah, so I don't know. I never really put it on my radar. I did type it up at a certain point today just because someone mentioned that it was getting crushed. And this, by the way, is that perfect trend in the other way. This is what I was just talking about with Netflix long on the daily chart, is UNH kind of short here. This perfect trend, I mean, it did extend a little bit on this move here by 1040, where it was like an accelerated move away from the ADMA. But for the most part, this is just like that 45-degree angle downtrend that you don't want to be fighting. It's the worst type of trend to fight. It's the worst type of trend to do counter trend trading on. It's the best type of trend to just see the pivot high come in, short versus the pivot high, see the pivot high come in, short versus the pivot high, and just be a pure trend follower along with whatever algo it was that was dumping the stock on the ADMA or the VWAP or whatever it was throughout the entirety of the trading session. You never got that like downside extension to try to come in on the other way. So you just want to be shorting this and not fighting it. But for me, I don't really like the $600 stocks too much, so it takes a lot for me to get involved with it. Thanks, Robert. Back over to the VTF. I need to work on from David. Need to work on better recognizing opening momentum. I thought AMD could go. Yeah, the semiconductors ended up disappointing today. I liked the semiconductors this morning. I thought if anything could get the Qs to continue. Not short term. I'm not bullish on the Qs because of their extension. Long term, I still am. But I'm recognizing that an extended market can become more extended. So if the Qs were going to become more extended today, if they were going to become more extended today, I thought that the semiconductors, charting wise, were the ones that were primed to do it because you had no extension in this AMD right after it broke its downtrend. You've got no extension really in this NVIDIA because it was only like a day one up after getting through these moving averages. That could have given a day two today and continued. but they just didn't go, and it was, pretty quick early in the day that it just chose not to go. So you're struggling to recognize the opening momentum. You thought AMD would go, but it struggled to break the opening high after a down move. Yeah, I don't think it ever did break the opening high, right? Yeah, it never broke that opening high. Um, Needed to quickly recognize that the continuation is not there and get out. TSLL, Long, and Tesla already went, and my psychology is telling me I already missed the trade. I mean, you did, like we said before. If you didn't have that right away, you missed it. But the momentum was still strong. Overall, need to work on recognizing momentum. The thing with momentum trading, and in some ways, this is a great thing about momentum trading, is that you recognize your level. However you wanted to trade AMD long, or however you wanted to trade Tesla long, whatever. If you're thinking, I don't know, I want AMD to break the opening high for me to buy it to see if momentum comes in, or I want AMD to get above yesterday's high for me to buy it to see if momentum comes in. You put a buy stop in at the level where you expect the momentum to come in. If the stock is not participating that day and fails down, your order's just never going to trigger and you're never going to get in, and it's no harm, no foul. Or in other cases, if it just doesn't like immediately go right off the open with the volume like Tesla did, you might look at AMD and say, all right, like even if this thing does break the opening high, this thing's just not exhibiting the volume signal and the momentum signals that I want to actually see. So I'm canceling my buy stop because I don't want to be in if this thing is just going to be sloppy. So the benefit of kind of being a momentum trader and recognizing those levels is that it's impossible to do a perfect job because there will always be, shakeouts that occur where a stock looks like it's given big opening volume, triggers you in, and then fails and doesn't actually go. But you can a lot of times do a decent job of not being in it when it doesn't go, or recognizing that it's not right and then pulling that buy stop. So that's the biggest thing. And a lot of it I do think comes from just recognizing those daily levels. This Tesla had a beautiful bull wedge into a very clean straight line resistance level, and it's one of the hottest stocks that's out there. Everybody's I gotta answer this really quick. I'm very sorry. I'm gonna actually I can't because I'm on the YouTube. All right. All right. Let me just continue. Everybody's eyes are on it, and sometimes you could argue it's a bad thing when everybody's eyes are on it, but actually sometimes it's a good thing. Um, because everyone is chasing this, everyone needs to get in it, everyone wants to be in it, everyone's a buyer here, no one's going to be a seller here. Sometimes it's a good thing when everybody's eyes are on it. So I don't know. That's just kind of my 2 cents on momentum trading. What do you think about today's coin chart with Bitcoin under 100K? I didn't really look at coin. Yeah, so everything in the Bitcoin world failed today. Bitcoin itself failed back down in a way that I feel like it shouldn't have. I feel like it should have given a day two. It's interesting to me when we're seeing so many signs of the animal spirits that Bitcoin is not going, that Coinbase is not going, that MSTR is not going. Like, this is a market. If this was late 2020, early 2021, these would have gone today. Like that's kind of what I'm saying. Like, I'm drawing comparisons to that period of time, but I do think it's different. I don't think that what we're seeing right now, it's a little example of it, but it's not the same environment as it was in that period of time, and I don't expect it to last as long as we saw in that period of time. But it's interesting to see that those names fell down. APP was interesting, last minute seller today. It was. That's another example of it. And that was very hard also. That APP, everyone's looking at this thing for a pullback at this point, and it is holding in super strong all day, and out of nowhere in the last 45 minutes it just breaks down and causes you to get an upside tail. That's very, very hard to trade. It's like they wear you out by 3:15. If you got APP short on your mind all day today, you're feeling pretty worn out by 3:15, 3:20 when this thing actually breaks, and you probably threw in the towel by then. All right. All right, I gotta jump. I gotta call this person back. It looks like I got through pretty much all the questions there. I hope everybody had a decent day. This market is getting wild. It's getting exciting, even though the indexes aren't. A lot of these individual stocks are just really wild right now. So